Good afternoon, ladies and gentlemen, and wonderful traders. This is Dynamic Trader, and I'm here to show you how I analyze my trades. In parentheses, top-down analysis. So let me quickly analyze this pair. Most of us have told you guys that I'm SMC trader, smart money concept trader. So I'll quickly run a quick top-down analysis on volatility 25, and volatility 25 is a synthetic indices pair which runs 24 hours, 7 times in a week. So we don't go break like the normal currency pair. So you quickly analyze this pair on the daily time frame. So when you see 24 hours, it means daily. So I'll have to start by backing out the key zone, which is this place. So here has been acting off as a resistance level. You can see the price got to this place, came down, got to this place, came down for the second time, got to this place, came down, got to this place, came down, then finally it broke above it. So whenever we see this kind of reaction, it's expected that it's clearly what we call break, all right, break above. Then once there is a break above, we're expecting what we call a retest. Then we dive to the upside, which is continuation entry. So there should be a retest, then you go back to the upside. So this is what I see on the daily time frame. All right. So the next time frame to go down to is the 4-hour time frame, since we're running a top-down analysis. So on the 4 hours time frame, now I've been able to see that the price did this. Okay. Now I have to change this to a line chart. So on the line chart, we've been able to see that, okay, what the price did here was the price broke above this particular resistance. They made a retest. They went to the upside. All right. So, but it went to the upside this time, retested, and is bullish based on what the 4 hours is giving us. Okay. So let me turn it back to the candle chart. So as an SMC trader, this is what I will do. I've already seen what we call break of structure. All right. For us to be bullish, or the condition, for you to know that the chart is bullish, it has to be creating series of higher highs and higher lows, higher highs, higher lows, higher highs, and higher lows. All right. So that is what the market is doing at this point in time. It's actually creating, it has created higher high, higher low, higher high. So it has to create another higher low to continue to the upside. So we have to see that the market has done what? Respected this and it's going. So the next line of action to take is, let's go to the 1 hour time frame to see what the price is doing. So on the 1 hour time frame, we've been able to see that the market has broken structure. So waiting for a little retracement and continuation to the upside. And if you observe the trend line, if you draw a trend line to the upside, you can see that we've done a first touch, second touch. So we're expecting what? A third touch, then continuation to the upside. All right. So now, having seen that, we're expecting a third touch to the upside. All right. Then we scale down to the what? To the 15-minute time frame. So coming down to the 15-minute time frame. Sorry that I'm rushing the class. All right. I'm rushing because I don't want this class to be too long. All right. So let me shrink this chart this way. All right. So on the 15-minute time frame, we've also seen that. Now let me, okay, before I delete that, there is also a break of structure to the upside. So now I will label this break of structure, or some people call it break of market structure. So BOS, break of structure. Okay. So now, as an SMC trader, we have to look for the closest order block that caused the break of structure to the upside. So on the 15-minute time frame, The major break of structure is this. And what is, as in the other block, rather, sorry, we'll mark out the other block that caused the break of structure, sorry. So this is the block, the other block, or you can call it demand zone, okay? In the case of a buy, we call it demand zone. So this is the last bearish candle that caused the break of structure to the upside. So if I go back to the 1 hour time frame, you can see that clearly. Now this is okay. So on the 1 hour time frame, this is the last candle. So let me bring it down. Yeah. So this is it on the 1 hour time frame. So this is top-down analysis. So this is the other block that caused the break of structure to the upside. This is 0.1. All right. So what we simply do is now we're waiting for price to do what? Return to this point, which is they are having a confluence with the top touch of the trend line, but then we're not entering from the trend line. We're entering as an SMC trader. I'm waiting for the price to get to this point, then I'll take it to the upside. All right. So this is clearly what I'm expecting on VIX 25, volatility 25, either today for the setup to play out or tomorrow. So having said this, now let me step down to the 15-minute time frame. Okay, so on the 15-minute time frame, you can clearly see the confluences. All right, you can clearly see that we're expecting this is the first touch of the trend line, second touch, expecting a third which is going to if it's going to be induced. So this point of this trend line is called inducement. And for those of us that are new to SMC, that's what we call characteristics of an order block. All right, an order block must be close to liquidity. It must be close to a fair value gap. It must be close to inducement. It must be close to a flip zone, and it must what? Break structure. So this is inducement. All right, this is break of structure. This is the bullish order block. So what I'm clearly waiting for now. So let me delete all this. All right. So if I don't want to mislead you with this trend line, I'm just using it as a confluence. All right. So this is the clear setup that I'm waiting for on the 15-minute time frame for volatility 25. So now what I'll simply come and do now is I'll plot my buy limits. I want to call this, so the buy limits, okay, I would wait. So my stop loss would be just a little bit below this other block, okay? So this is how I analyze my trade, and I'm simply waiting for the what? For price to do what? Tap into this bullish order block, then we'll continue the trade to the upside. Being that I've seen a break of structure, this is the bullish order block, okay? Waiting for price to return to this point, then I'll take. So this trade is clearly going to be I usually take my trade 1:4. So since I'm targeting this high, okay, so it should just be 1:4. So I'm waiting for price to do what? Return to this point, then I will engage on the trade to the upside. So if you have any question as regards to trading volatility indices 25 or any other pair of your choice, so simply leave a comment in the comment section, and I'll be sure that I am going to answer your questions. And this is also what we're looking at. So for a trade to come to the downside, it has to be printing lower lows and lower highs. And this is also a way to tell you that this trade is going to come to the downside, because it's actually creating, it has created trend line liquidity. All right, liquidity is what fuels price in SMC. So you can see this is also liquidity printing, which is going to attract price to the downside. It's going to, because people are already selling, buying. So it's going to clear early buyers, all right, and take their stop losses to this point. Then we move to the upside. Okay, so let me just bring this. Yes, let this be 1:5 risk to reward. And that will be all for today's section. Okay, see you on the next one. All right, see you on the next one, and bye-bye. Okay.